get going. Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with the money that you can't afford to lose. Past performance does not equal future results, and the results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Fantastic! There's that out of the way. Now we can have some fun. Hi, Phil. Can you talk about deciding when to make a trade in the early morning and when not to, please? You mean futures, I hope, because it's a futures trading webinar. So none of your silly stock talk today. All right, let's see how things are looking. Very simply, these are the future screens that I have up at the moment. Do I need these ones in particular? Well, we were going to talk about NG, so we'll leave that up there. Usually I wouldn't be caring about natural gas if I'm trading the stock futures. In the morning, I will generally look at my my big group of charts. Just to get an idea of the trends. I want to see what my indexes are doing, including the NIKKEI. I want to see what the dollar's doing. I want to see what gold's doing, what silver's doing, what oil and gasoline are doing. Natural gas is over here. This is treasuries. And here's financials. Here's the VIX. Here's Apple, most important stock in the world. Here's our friends at Tesla, not having a good day. Amazon was shorting, so I wanted to see how they're doing. Chipotle just happens to be there. Netflix was shorting too. So, you know, there's some stocks that are on my watch list and some stocks that are, but this group over here is my real standards. Like, always got my indexes. I always have gold and silver and the dollar. I always have oil and gasoline and natural gas. And I've always got treasuries. I've always got XLF. I always have the VIX, and I always have Apple. The only ones that really change are these five. Really, they're the only ones that actually change on any kind of regular basis. So everything else is my standard screen. Anyway, as our members know, I tend to wake up like at 3 in the morning. And depending on the day, if it's exciting, I'll stay up and I'll do some work. If it's not exciting, I'll take a few notes or read a couple of articles. I usually post them up to the member chat if I think they're important. And then I try to go back to sleep, or if I don't go back to sleep, I try to lay in bed and do something like watch The Daily Show, because frankly, it's too early to get up. You know, if nothing's going on in the market, for me to sit in the same chair from 3 in the morning until 4 in the afternoon is just an annoying day. So I would rather lay in bed and play, play with my iPad and do some stuff and get some, if I can't sleep. If I can sleep, I go back to sleep for a little while. But I'll get up at 3 usually, and I'll take a look at the screen. I'll see what's going on, if anything interesting is happening. And if not, and this particular screen I would call not, there's nothing really going on at the moment, I'd rather get some rest. Also, though, the other thing I like to do is I like to go and check the news. All right, so I want to go through the process here, because you know, hopefully you're constantly reading the news and know what's going on in the world. And today, if I'm going to be trading right now, if I intend to trade in the next couple of hours, I should be all caught up on the news, so I know what's affecting the markets right this minute, what's important right now. And if you don't know that, how dare you trade? I mean, that makes no sense. That's like just driving your car with your eyes closed without having a map or knowing what the road looks like. You're just gonna go and hope for the best. You know, that makes no sense. And believe me, if you think you're a TA person, that makes just as much sense as saying, I'm going to drive my car because the road looks straight and I'm just going to keep going straight because it looks straight right now. You know, that makes no sense either because you know it can curve. You know it can turn. It's irresponsible not to check to see what the road looks like ahead. And in this case in the market, looking at the road ahead is also looking behind to see what's happening. So here's a good one. So seeking alpha stock talk is actually very good news. Gonna open that in a new window, open a new tab. There you go. Is that the one? Is it stock talk? No, I'm sorry, that's the wrong thing. News. I'm sorry, it's a news thing. It's called market currents, I think, not stock talk. Don't show summaries. There we go. Now, I like to do today so far. If you don't do today so far, what happens is every time there's a new thingy, it pushes all the rest down. It's really disorienting when you're trying to read it. So I always go today. So I choose the option that says today so far. And first thing I do in the morning is I'll go to the bottom and I remind myself, like, what is the calendar today? We have housing starts, we have chain store sales, we have the Fed speech, and we have Yellen at 11 o'clock. You know what? Yellen spoke at 11 and none of us paid any attention. Obviously, she didn't say anything that was good enough to make people happy. So since it's right now after that, I'm just going to search for Yellen and see if she gets a mention. And she does not. That's sad. So whatever she said at 11 o'clock really kind of passed without notice. And I'm sorry because I can't let that go. Let's find out what Janet Yellen said at 1 o'clock. At 11 o'clock, sorry. It's so embarrassing. My daughter's computer, so. Or the one she uses anyway in my office. All right, Yellen. Brief remarks. Oh, good God. You're here to honor she honored public servants. That's not, this speech had nothing, that's why the market went down. This speech had nothing to do with QE. See, people see that Yellen's speaking, you don't know what she's going to say, and this is her honoring two public servants. So that explains why we see this. See, and this is your job. You know, when you come in, you want to say, why did the market suddenly sell off? Let's go to a better view. Why was there disappointment at 11 o'clock? All right, so this is, you know, when you see, when you're looking at the futures charts, you have to say, what caused this move? All right, so earlier this morning when it was going up in member chat, I said to our members, I said, guys, we're going up because Yellen's speaking at 11. And I said we're probably, I forget what I said exactly, but whatever I said, it was right. So let's see if we can find that. And as usual, I try to make my headline a future prediction of what's going to happen. Okay, so I said Williams is speaking, and then we have Yellen at 11, so of course we'll test the top again, meaning 2035. That was our prediction. And of course that's the prediction on the top of the morning post anyway. That's failure. In fact, I predicted failure at 2035. And so what happened? Now we go to the this one. And we'll pick the 5-minute chart, and here we are. See that? Boom, 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 boom. We didn't quite make 2035. That's the futures, though. On the actual S&P, we did make 2035. But the futures didn't even get close, and a big failure and a total collapse, and now we're right back to where we were here. And if we zoom out to like an hourly view, this is the futures. Don't forget, see this line? That 2020 line is really solid, okay? It's really getting to be a pretty firm something. Now, an optimist might say we're basing off of that to hopefully go higher, and a pessimist would say we're failing. And something's going to cause us to go lower. I happen to be, at the moment, in the pessimist camp. I think this is all going to collapse. I think because it's being sustained by garbage. It's being sustained by QE, more QE. Oh, look how bad the data is. Look how bad China is. They have to put some more easing. Oh, look at Japan's terrible. They got to ease some more. That's the basis of this rally. It's a terrible basis for a rally. So I can't bring myself to go long. We just keep looking for short opportunities, and there's plenty of them. So you're like short opportunity, short opportunity, short opportunity, short opportunity, short opportunity, here, 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 and here. Now, if you play long, you would have just as much success as we do. If you call it right, I just think it's easier for me to be short because here's a very important point about the futures. If you get burned to the wrong side, you're either going to take a loss or you're going to ride it out. Riding it out in the futures is very painful. If I don't have conviction to ride something out, like I have conviction that the economy is not good, I have conviction that we're trading too high in the market, I have conviction that earnings are going to take us lower. So if there's a spike that goes against me, I'm not going to stop out because I'm not scared of the S&P going higher. I might take a big loss, I might be wrong, but I'm just saying, though, I'm willing to ride that out. But if I were betting long and I had something move against me, I would have no conviction whatsoever that I should stay in that trade. And if you can't trade with any kind of conviction, the futures are going to throw you out because they zip up and they go down, they go up and they go down. Well, here, look, here's a 5-minute view. That's what the futures trade like. So you could be wrong. You know, I could have gone short here. Well, let's say I went short here at this line, 2022. I could go short here and get burned. But because I have conviction, I'll add more. I'll at least ride it out. And I'll ride it out and ride it out and ride it out. And lo and behold, I end up being right. Now, you could say that if you were long here, too. If I was long here and it went down, you have conviction, you can ride it out, and you're right eventually, too. It always goes, they go up and down a lot. And if you're willing to stick with something, you have unless you're completely wrong and the thing's breaking down, but you have, in a normal flattish market where it's just going up and down in a channel, as long as the trick is to stay away from the middle of the channel. If you try to go long down this way and you go short here, you can be very successful in both directions. But you got to observe the channel and say, hey, so in other words, you look at this channel and you say, wow, this seems to be the top, and this seems to be the bottom. And so every time it comes by the bottom, I'll go long, and every time it comes over here, I can go short. But again, I see that channel too, but I would rather just go long or just go short. And when your channel breaks, you get the hell out. You get out of your position. You say, oops, I was wrong. End of story. So the key is to find a place to enter a futures trade where you're comfortable being long or short, but you have to be comfortable that you think you like the line. Like here's 250 on natural gas. 250 failed. Okay? But we have something called the 5% rule. It tells us that we know 250 is going to fail. Okay? 250 failed because, back to this thing. Here's natural gas. Here you go. So we come off of 242. A little calculator. There we go. So 8 cents divided by 242 is 3.3%. There's nothing special about that number. Okay, but 2.5% is a special number. So we're going to say, let's take 242 times 0.02, times 1.025. So 248.05. So according to the 5% rule, and the 5% rule includes, it's called the 5% rule, but it means there are significant movements around the 5% lines. 5% lines include the 5% line, the 10% line, the 15% line, the 20% line, right? It also, after 20, though, you jump to 40. There's really nothing significant about 25 or whatever. But 5, actually, it's really 5, 10, 20, 40 is how it works. It's kind of like a Fibonacci series. Now, but below 5, it's still valid. So 2.5, 1.25, 0.67. 0.67, of course, obviously is a nothing move in the markets. It used to matter because the markets used to not move much more than half a point a day. Now, these days, they go 2% a day. So, so you don't usually have to go that far down to watch something. The more actively something is traded, the larger the turnover, the larger the volume, the more you're going to see an abeyance to those sort of numbers, to the smaller numbers. In lower volume, you won't see it. You'll only see the 5% lines come into play. But 2.5% on the indexes is very, very significant. So is 1.25%. Natural gas, heavily traded. The 2.5% line is going to be very significant. And so what we see here is that we make this move down to 242, which is old support. Let's look at a longer term. Okay? Well, it goes back to here, back to October. But so it's a double check support, which I guess does show up better in the hourlies. Here it is over here. And we look at a 2.5% move off of that. And by the way, your fall, and again now I can go, oh, sorry, go back to the daily. It's hard to see because really we're coming down so hard. We came down so hard here from 450 to 3, and we consolidated on 3 for a while, consolidated on 3, failing 3 all the way down to 250. And I'm sorry, not really 250 because obviously 20% below 3 is 240. But we haven't quite gotten to 240, so that hasn't been an issue yet. 242 so far has been holding up. So anyway, so 2.5%, now I lost it. So 242 times 1.025 is 248.05. All right, so if we look closely at the 5-minute chart, what would that 248.05, which is right here, is where you expect to bounce up to. And you see how we stopped that out here? See 248.05 right there coming into play? So you expect this problem at 248.05 because that's the 2.5% line. Of course you're going to have trouble crossing the 2.5% line. All right? We fail, we pull back a little bit, we get up, blah, 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 blah. Now, meanwhile, we got over it, we came back, we got over, we come back, we get over, we come back. We expect resistance at 252 though. At 250 you're going to get resistance. And how much resistance do you get? Well, if you're going from 240 to 250, that's 8 points. And then that means that your pullbacks are going to be 20%. So times 0.2 is 160. So you're going to get a 1.6 pullback here is a weak pullback, and a 3.2 pullback is a strong pullback. So a strong pullback is going to take you down 3.2 from 250, so right about 247. And that's exactly what we have now, is a strong retracement. If 247 holds, and actually it doesn't have to be 247, it has to be 320 below. So it's 246.80. But if 246.80 holds, that's still bullish. It's only a consolidation move when you're down here. You expect the retrace when you hit a significant resistance point. And 250 is certainly a significant resistance point. All right, so around here, we're playable for a long. We may dip a little bit below 247. We may go down to 246.80, which is 3.2 below 250, and we'll just have to see how it pans out. Was there any sort of anything at that point before? There was kind of here, kind of held as a feeling just for a little bit, that sort of level, but not. But then here we busted right over it, and now we're testing it from the other side. That's a good sign. That makes this a good bullish consolidation as long as this holds and as long as we don't retest 250 and fail it. But the next time we go over to 250, we might top over it. And don't forget, I'm very bullish on natural gas. In fact, at last week's seminar, we were talking about natural gas. Let's see if we can go back a week now. And we were long on it. And we were long on it here at the 250 line. We had a good time because that was what, what was Monday? 19th. This was Monday. This was Tuesday. So here was our seminar last week. And we wanted to go along here. Remember, we were having trouble with it, but we decided to stick with it at 248. Then we went blasting up here to 256. The stop out would have been at 255, of course, coming back down. We let it go down. You don't try to be a hero when it's coming down. We got back in over here at 242, and then we had a blast and it came back up. And that's how come on this screen, we got this 29.80 gain on this thing. I'm out of these contracts. We have nothing. We flattened out here on NG. That's the NGX5 contract, which is November. See, it's the same thing as 29.80. But if we move now, what I've got left is, because when we were bottoming out on Thursday, we moved to NGZ5. Whoa. NGZ5. See that? And these are not doing so good now. They were doing much better earlier. These are at 890. There's 4 of them, so they're up about $200 a piece. And they were at 270. But I'm not in this for the short run. I'm not looking to cash out. Okay, so I'm in this thing for a ride to $3. So we switched to these contracts, and that was very effective, and let's take a look at that. In fact, I think we talked about it. Where's this thing? Oh, yeah, here you go. On the 16th, which was that Friday? Or was that Thursday? No, that was Friday. Okay. So on Friday morning, this came from our chat room at PSW. This is actually our morning alert to members from PSW. I published it on the options opportunity portfolio at Seeking Alpha as well, just to let them know where we stand on this, because we did have a UNG trade, so it affected them as well. So in our member chat at PSW, this is how I open my morning. I say good morning, blah blah. Here's the overall situation. This is what we do every morning, and then we look at the indexes and where they are and what it looks like. We said DAX over 1,000 means they're not panicking in Europe, so it's good. And I talked about the perspective on the charts. Talked about where we could short the majors, and the rules. This is actually very important for futures. I like shorting our majors this morning, and here's the lines we picked for the morning, only on crosses below by the third of the fourth. And if any of the three cross back over, and then quickly see the fourth, and we want to quickly see the fourth to confirm the draw. So another very tentative sort of entry. That is a general rule for any futures trade, though. You want to pick four things that you're watching, and you want to short. After you have two confirmations that it's going in your direction, you then want to short the third one and then make sure the fourth thing you're watching confirms as well. And then if any of them go over, obviously including the one you're in, you just get right the hell out. And what this does for you, though, because let's assume that you're right half the time. If you're right half the time and you take a really quick loss when it goes against you, you're not going to lose much money. But on the times that you're right, you don't stop. When you're wrong, if you take a quick loss, you're okay. But if you don't, when you're right and you get a good break in your direction, there's no stopping out. It goes in your direction. And you can make 5, 10, 20 times more money when you're right than when you're wrong. That means you don't have to be right all the time. But it's all about having a discipline when you enter and exit these trades. You must have a discipline, and that's part of it, is you have to pick very, very solid entry points that have a good reason to enter with a strong confirmation and solid support for your position. And if you don't have all those things, don't make the trade. So here we are with our game plan on Friday morning, this was. And I said there's still 11 days on NGX5, so I'm still at the weekend. I laid out the position we have. NGZ5 is 267. We wanted to add 265, and we accomplished our mission here. So we stuck with the one that was going down, NGX5, and instead of adding more to NGX5, we added more to NGZ5, which is the next month out, which is December contracts, because obviously the December ones expire later. We're going to be forced to get out of our NGX5s next week. So rather than add more to those, since we're going down, obviously both months are going down at the same time, and that made sense for us to write it out that way. So this is our instructions for the futures and how we're trading it exactly. I had all these different views of it to explain what we're doing. We talked about that. We also got much more aggressive on our UNG trade. And on UNG, we had 10 of the $12 calls, and we rolled that to 20 of the April $10 calls, and then we had 5 of the puts, and we rolled those to 10 of the $11 puts. So it's a very, very aggressive bullish trade this is, where we now have 20 April 10 calls, and we shorted, so 20 times 220 is $4,400 long, minus $1,200 because only 10 short, so that's $3,000. So we have $3,000 in a long position of 20 April 10. So we need natural gas over 1150. We need UNG over 1150 to break even on this trade. Obviously, these short puts would expire worthless. So on the option side, we have 3,000 contracts worth, 3,000 units worth of UNG under contract in our option. I'm sorry, 2,000. We have 2,000 contracts for $3,000. That's our position. So it's a very highly leveraged position. But we can do that because, first of all, it's a $100,000 portfolio, so you keep it in proportion to whatever it is you're playing with. We can do that because we have, we don't consider the 1150 to be a high-risk position. Remember, we don't lose any money unless it's below 1150. So now let's take a look at UNG in one of these things. There. UNG, right. So we'll take a look at UNG. And you see how we're really at a super-duper low here at 1111. All right, and here's the 1150 line. I think this is just a short time below. I think this is a blow-off spike trying to chase people out. I think we're inevitably going to start going higher, but mostly because of the seasonality, okay? People start using natural gas in the wintertime. It gets cold, you turn on your heater. That's natural gas. Well, for most of us anyway. That's where it comes from. So what causes a drawdown in natural gas? Don't forget, natural gas, it's not like oil. It doesn't sort of, you're directly, you don't have to go to buy natural gas at the gas station. When you turn on your heater at your house and it starts boiling and the hot water starts going through your house, or whatever it is system you have, or if it's forced air, whatever it is, but whatever it is, your natural gas heats up your home. It's directly drawing that natural gas from the pipes. Okay, so you don't have to go make a trip. It's not like stockpiled at your neighborhood gas station, and it's not going to be directly reflecting. The minute it gets cold, in a big, as long as it's a big section of the country, but the minute it gets cold and people start turning on their heaters, especially in the Northeast, where most of us, probably 90% of us, are natural gas, that causes an immediate drawdown on the system. There's no delayed effect. Like with driving, the gas is in the gas station, so if the gas stations have plenty of gas and people drive, it doesn't necessarily cause a pull down from the refineries because the gas stations may have had so much gas they didn't bother making another order. That is not the case with natural gas. Natural gas comes directly out of storage when you turn on your gas. End of story. That's just how it works. What happens at the end of the summer with natural gas is that people turn off their swimming pools, which use a huge amount of natural gas for swimming pool heaters. People turn off their swimming pools in late August, around there, and the natural gas use will bottom out, and then then it starts getting cold, and here you see here October, and then it's January, and here you have September, and there's a spike up, but then it fell apart last year. Last year was kind of weird, and we hope that doesn't. I don't think that'll happen this year, but that's what happened because everything crashed last year, including oil, and everything sort of followed down to new levels. That was a weird year. This is what's normal in natural gas. Normally, you have a little turn down into the fall, and then all of a sudden it gets cold, and everybody starts using it. Oh, also last year there were no hurricanes at all. When you have no hurricanes, that means production runs nonstop in the Gulf of Mexico, and that also caused a bit of a surplus. So there was a lot more gas than people thought there was going to be last year because there was no interruption whatsoever of the drilling. Now, let me stop and see if there's any questions at the moment. Here it is. Oh, there it is. What are the people talking about? Emplad says, can you talk about deciding when to make a trade in the morning? Okay, well, that's what I was talking about. And these lines are critical. It's just the most important thing is, do you have a good place to enter or not? If you don't have a good place to enter, go back to sleep, or whatever, or just wait. Oh, and I'll say this about about futures trading. It's the same thing about futures trading as it is about day trading for people. If you fancy yourself a day trader or a futures trader and you make it your full-time thing and you sit there staring at those little 1-minute charts and 5-minute charts waiting for something to jump into, you will overtrade. Okay, and the same thing is true if you're a poker player and you sit there and you wait and you wait and you wait for a good hand and you can't take it anymore and you decide to just play a couple of cards with a so-so because you're bored. It's the same thing. It's the same instinct that you have. You want to play the game. You sat down to play. You want to play. It's even worse when you only allot yourself a certain amount of time to play and you start feeling like there's some kind of pressure on you to make a trade. Those are all bad feelings. Those are all bad things to be having. And you need to learn to control that instinct. You know, I tell a lot of guys who trade the futures who are over trading, I say, you got to get a hobby. You have to get a hobby to do while you're trading that distracts you from trading, that like stops you from trading, where you go, oh, well, okay, I'll trade if I see something. If not, I'll go back to doing something else. I don't care what it is. It could be whittling, it could be watching TV shows, you can watch soap operas. You got to find, read a book. You got to find something to do besides staring at a screen waiting for a trade, because that makes you pick bad trades. When there's a good setup, it's a good setup. It's obvious, it's right in front of your face, and it's time to trade. Otherwise, though, you shouldn't be trading. All right, Jal says he's not get the IBM 218 $10 put 110 puts at the advertised price. I don't know what price that was, but damn, I would. I don't know what price it was, but damn, you should be able to get them today. IBM took a real bath today, didn't they? Where's Mr. Yahoo? Yahoo will tell us IBM. Ouch. They're dragging along the 140 line. I do not even understand the gist of your sentence when you say you couldn't get a fill on IBM. We should talk about that, though. I've decided that IBM, at this moment, because it came back down in price, IBM is now my 2016 stock of the year. And it's a little early to make that call, unfortunately. I usually wait until Thanksgiving. But I just can't see anything that I would like better than IBM for next year at this price. We talked about that extensively in chat today. I don't really want to get into it right now, but I love IBM. I think it's so underpriced right now. Oh, May says, do you have IBM in the OOP yet? No, we don't, and I will put it there, though. That's right. That's a good point. I should put it there. Robert has to reboot. Somebody tell Robert he should try rebooting, restoring the system. Steve Holtz. So on the 5% rule, you pick a low point as a starting point. No, you have to look for consolidation. So, with the 5% rule, first of all, we have an overriding 5% rule that's been going on for years. We have the charts. There's a thing called the big chart, which was at the top of this morning's post at Phil Stock World. Where is that? Here it is. Okay. So you see here, this is the 5% rule, and it tells us what our must-hold lines are. And this is actually incorrect. We need to fix this because this is the wrong NASDAQ. So it says 49, but we should be watching the composite, or the not composite. I forget, the 100, not the composite. Whichever one is 4,000 is the one we should be watching, whether it's closer in this range. Anyway, so the must-hold lines go across like that. These are where we must hold. These are the 10% lines. That's technically the top of the range. Like I said, the NASDAQ is way out because it's messed up. And this tells us where we are. This tells us whether we're bullish or bearish. When you have 3 of your must-hold lines are red, you have to be bearish. It's very simple. I don't care where the NASDAQ is. You got to be bearish because these guys say, no, we are not doing well. He's not even at the 5% line. He's below 5%, below where he's supposed to be. So these are the lines. You can see them right here on the charts. Every once in a while we print these charts and you can see the majors. So those major lines are real important, and from those we'll tend to make our other charting lines. But generally, we're looking for pinpoints. So if you look at like the S&P, and you look at it hourly, you say, where are the consolidation points? And you say, well, 2,000 seems to be reasonably holding for bullish, and 2025 seems to be reasonably bearish. So you kind of have a channel here where 2,000, you got to be careful about 2,000 if it breaks, but generally it seems to hold fairly well, other than this little downturn for a couple of days. But even so, you wouldn't have hurt yourself if you were bullish here and stick with it. And obviously, if it goes down here, this is super bullish because 1980 has been pretty rock solid for the last month almost, for 3 weeks or whatever it is. So you look for channels. Now, if you want to confirm your channel, though, as you see me doing a lot, you got to go further out. You zoom out and say, is that really a channel, or am I hallucinating? And now you see that this channel that you look at is nothing. It's a little blip, right? So it's not. So now you say, well, it's not such a great channel. If you were looking at this channel at 2100, like, if you were looking at the zoomed up version of this, which I can't do, unfortunately, but if you're looking at the zoomed up version of this and you said, wow, that 2100 looks kind of hard to break, right? And you were looking at if you were looking at this version of it, All right, let's say this is 2100. And you'd be like, wow, that 2100 line seems kind of tough. I wonder if that's really tough. Then you zoom out and you go, holy crap, look at this. This is going back from February. They've had trouble at 2100. So then you say, damn, that's a good line. So, okay, that's how you would select the 2100 line. You would say, holy cow, that is a rock solid, bear line for the S&P. They really have trouble staying over that line. Got rejected here, rejected here, rejected here, a little over here, but then rejected, a little over here and rejected, a little over here and rejected. So this is not a good line for the S&P at all. So now you know 2100 is a bad line. We also know, and by the way, if you go back to the big chart, and I hope this doesn't go too fast for people, but there's a lot of stuff to talk about. Meanwhile, I can't even find the big chart. Then we go back to the big chart, and we see that 2035 is a line. 1850 is a line. Okay, so that's where we are now. But if you extrapolate these numbers, you go 1850, well, it's very simple. It's not complicated. We didn't even used to have a chart. It used to be just the math. It used to be this spreadsheet here that you see, that was the 5% rule. I never had a chart, but I used to tell people I think it's silly to have a chart. But, Jean-Luc started doing these charts, and I really like them, actually. It's nice to have a visual for people to do it. I mean, in my head, when I see a chart like this is how it looks in my head anyway. This is what I see when I look at these numbers. But I know most people don't think of things that way. But, guys who are statistical people, this is kind of how we think in the back of our heads anyhow. So 1850 times 1.15 is 2127. That's the 15% line. It's not complicated, right? So 1850, the 15% line, the next line above here, is 2127. That's where we expect to have resistance. So do we in fact have resistance at 2127? Oh, you're damn right we do. That's the tippy top. So now we know. Now we know what our range is. And that then tells us so if we say, okay, well, we came up from our 1850 line, and again, you got to go back further, and here's 1850. See it here and here and here and here and here where it had trouble getting over. So that's a big line, 1850. So we look at our 1850 line, and now we know that we went up from 1850, and in this case, I don't want to keep changing the line. We went up from 1850 to 2100, right? So now the 5% rule tells us what? Then we expect a 20% pullback is a weak pullback, and a 40% pullback is a strong pullback. So you take 2127, right? Is that what it was? Damn. I can't remember what it did. Too many numbers. Oh, I know why, because I did it on the calculator and I messed it up. There it is, 2127. No, wait. 1850 times 1.15. It is 2127, thank you. Minus 1850 is 277 points. Times 0.2 is 55 points, okay? So now I take 2127 minus 55, 2072. Now we go back to the chart and we say, well, what happened at 2072? Now we're going to have to zoom in a bit. Oh, I don't think we can. I can be off the thing. Damn. Nope. It's hard to see here, but 2072, see this line here? Right about here is 2072. Exactly where we would expect to see the pullback, you're getting the pullback. So that obviously is held, but then it didn't. So what's below 2072? Well, it's going to be 2127 minus 55. Minus 55 again is a 40% pullback, 2017. So a weak pullback is 2027, which is right here. And a strong pullback is going to take you down to 2017. And so 2017 is right about here and right about where we are now. That's a strong retracement here. Now, if that strong pullback line that we expect from 2100, if that starts acting like overhead resistance, that's a very bad sign, and it means that we're probably going to leg back down, and then the next resistance line comes into play, which I think is 1942.50. That's the 5% line. So that's the next line you expect to see on the S&P. Is where it go? It's going to be 1942.50. Oh, and I'm sorry. So it's 2127 minus 110 is 2017 minus 55 is 1962. So it's all in that range. So the pullback, and it's always going to give you a little discrepancy because 5% minus 2100 is different than 5% plus 1850. Okay, even though you're trying to go if you go 25% up from here and 25% down from here, you don't get to the same place. It doesn't. You get different numbers because you're starting off a different base. But anyway, so 1962 on the way down and 1947 is the other way. So that's where we cross. So what we know now is this area is going to be a very big point of contention. And it already was, wasn't it? See how it was already a point of contention down here, and it ultimately failed. So their last chance to hold is going to be right about here at the 1950 line, basically. And if 1950 fails, you're going to go right back to 1850. There's basically no support at all the way down to 1850. So at the moment, overall, we're still weak. So now that then forms my basis for trading. Because overall, we're still weak on the S&P. And by the way, it's not just that, though. I'm reading that news, which we kind of got sidetracked from. But the news tells me also, am I going to be bullish or bearish? Well, there's nothing to... The overwhelming majority of the news that we've been looking at for the last couple of weeks has been generally negative. And not just for the last couple of weeks, but for ages, for many... for all year long, we've been saying this is toppy, this is toppy, this is toppy. I just made that point on Monday's post, in fact. We've been calling this top since March or February. This was the first time we cashed out our portfolio. We had the long-term portfolio. We cashed it out here in February. When it came back down here, we started buying again. When it got back here in May, we cashed out again. Then it came back down here, and we said, okay, we'll buy. So we started buying again. Came back up here. We cashed it out again. We just didn't like it. All right, and then now when it came down here, we started buying again. Down here we were like, okay, we'll buy that. What the hell? And also it's because of the entries we take, though, because the kind of entries that we take for our long-term positions, we always enter things with a 20% discount. So it's not even so much that we're calling 1850 a bottom, but when we start buying at 1850, and we bought a lot of stuff at 1850, what we're saying is 1850 times 0.8. 1480. We're saying we think 1500 is going to hold because that's where we're buying our stuff. Even though we're at 1850 by selling those puts at a 20% below the entry price for a discount, all we're saying is we think 1500 will hold on the S&P. All right, now if you want to see 1500 on the S&P, you've got to switch to the monthly chart. And let's see. Here's 1500 back in 2013. And look how far away it looks here. So when we're buying at 1850, we're just betting it isn't going to go past here. And you see how that's pretty, here's 1400, that's support, see the support over here too at 1600? It's not likely we're going to fail 1600, even in a bad turn. I certainly hope not. Anyway, that'd be kind of, something catastrophic would have to happen for us to fail 1400. So here's the 1500 line. So when we're buying at 1850 and giving ourselves a discount, it's not a huge commitment. It's not like we're getting super bullish. We're just saying, hey, I think we're safe. I think we're safe committing to buy stuff at 1500, and that's all we're really doing. So how's the futures looking at the moment? See, it's very boring, unfortunately. I wish it was a more exciting thing for trading it. Now, where are we? Chat. Jal said the IBMs. We talked about that. Where did you take off your shorts off on SPY in October? Shorts off on SPY? I do not know of any shorts on SPY. Are you talking about the S&P? I know we don't have any SDS shorts left or anything like that. Oh, the S&P. Well, we would take them off if we broke over 2035. I mean, that basically is a line where we say that's just too high. We just in Phil Stockwell chat just before we were talking, we had shorting lines. Is that where it was? 11? No, since 11. Oh, okay, so it was 11 o'clock. Okay, so our shorting lines were 17.2, 2035, 44.50, and 11.65. Those were our shorting lines. And as you can see, because these charts update automatically, as you can see, this is a good call, right? So we caught this line short here, and we got to ride down to here. And if we look at the other indexes, the futures, the indexes, and the 5-minute charts, okay, everybody kind of started collapsing around that time. This was my call at 11 o'clock. So here, wow, did we? I crack myself up sometimes. 11:10. What a great call. Holy crap. I don't know how I do that. So here's when I made the call to short, and here's where it goes down. And here's where I made the call to short, and here's where I made the call to short. So we pretty much caught it dead on at the top. And now we're done with the trade, basically. Now we're back. You know, now we had a nice pullback from where we were. And we're satisfied with that. We don't need to ride it out. And we're going to wait to see what the next setup looks like. But, you know, that's a good ride, man. I mean, if you look at the Russell from 1165 to 1156, that's $900 per contract. I mean, that's a nice move to catch. So, you know, we don't need anything better than that. That's fine. You know, when you make that kind of money, and the NASDAQ is $20 per point, and this is what, 75 points? All right, 23? No, 40? No, 25 points. All right, it's $500 on the NASDAQ. The S&P is $20 per point, so that's 30 to 20 is, that's not much. That's only $200. That's crappy. So $200 on the, no, I'm sorry, the S&P is 50. It's $500. I apologize. I knew that didn't make any sense because they all pay about the same when they make the same move. And the Dow is $5 a point, and that's about, what, 50 points. That's the worst one, so that's $250. But you can see why. The Dow held up better than the others. And I don't get that either, though, because IBM should be dragging it down more, and I can't imagine what, you know, that Exxon or anybody else is doing well. In fact, we can see that, though, because what you do is you go to, here's a good trick, by the way. This is one of my favorite things to look at when I want to figure out what's going on. DJI. So we look at the Dow, and we look at the components, and here they are. So you can see what everybody's doing. And 3M, for whatever reason, they're up 1.22. Travelers is up 2.72. I don't know what's going on with Travelers. Whoa, look at UTX. Oh, yeah, UTX. I knew it. I knew something had to be weird. UTX, they're buying like $12 billion worth of their stock. And UTX, I'll get the number right. They're an $85 billion company. They're doing a $12 billion buyback. Where is that? Look at that, $12 billion buyback. $85 billion stock. That's 15% of their stock they're buying back. So, yeah. So, you see something like that, and I say, okay, well, the Dow, so when you say, oh, the other index is doing daily, but, oh, the Dow's holding up, so maybe things are okay. No, the Dow's holding up because one stock added how many points? Let's see, UTX is what, $4 is this? Here it is. Here's why you got to know how everything works. So UTX, all Dow components are roughly 8 points per dollar because it's a dollar-weighted index. So all of them have equal weighting, but it matters how many dollars they move. So UTX moves $4.45, and it's really stupid though because if you think about it, Cisco is never going to move $4. So Cisco can move up 10%, and it won't have as much of an effect as UTX moving up 5%. Or actually, Cisco can move up 20%. It wouldn't have the effect of UTX moving 5% because it's just starting off with a lower basis. They can't make that kind of move. They're never going to get a $4 move out of these guys. So $4.41, and it's about 8 points per dollar on the Dow. So that's 32, and 4 is 36. So 36 positive Dow points are coming just because UTX has made one announcement. That has certainly nothing to do with the health of UTX, and it certainly has nothing to do with the health of any of the other Dow components. So the announcement basically saved the Dow from being 30-something points lower. 30-something points lower would be 1711, something in the 80s, so 1780. So basically the Dow is not here solely because of UTX buying back $12 billion worth of their own stock. And if not, it would be right in line with these guys. So when you look at something like that and you say, well, okay, so we look at the Dow, we always say short the lagger, right? So the Dow is lagging, but he's lagging for a reason because UTX is insane in buying back 15% of their own stock. That means they're not the lagger. It means everybody's bottoming out at the same place at the moment. And especially because this line in 2020 on the S&P is powerful support, so we can add about futures. That's the beautiful thing about the futures is you can always get out and you take your profit, and then you wait for a nice opportunity, and you get back in. The opportunity now should be for a bounce, theoretically, but you know my problem is? The thing about the Dow is that it's only being supported because of an artificial thing UTX did. If it wasn't the UTX, everything would be getting dragged lower right now. And probably the Dow would be much lower. So I still would say if these guys fail at this point, I'd love to short the Dow. That would be my favorite trade. If we start heading back up, then we can go long on the lagger here. So at 1155 on the Russell, at 44.20 here, and at 20.20 here, then out of those three, we'd look to see if we can go long on somebody. And we'd watch the Dow too, but we just don't expect the Dow to be down at this level. You have to understand how every single component works if you're going to play with these things, because it's dangerous. It's like only kind of understanding how a truck works and starting to drive it. It's like, oh, I know what most of these gears do. That's never going to be a good idea. All right, so. Okay. Is there a time of day, early morning, that you see the fake future moves routinely occur? Yes, absolutely. Sometime before the market opens, generally usually it comes around when Asia's closing, like about 3 o'clock in the morning, 4 o'clock in the morning. And it's sometime before 9 is usually you'll see a biggish move up, and it's a great time for us to short if we have a mindset to short. By the way, I got to say it always depends on what the news is and whether or not things make sense to do. Mary says, "What's my analysis on TASR?" Well, unfortunately, Mary, this is not a TASR day. The only thing we see as far as like why TASR would be pulling back is because Motorola, who is now part of Google, Motorola is coming out with something like a TASR. So obviously, big competitor, blah, blah, blah. I don't think it's a huge issue. I think that, frankly, TASR is such a big first mover in the market, and they're already in so many places, that while Google may be able to push and kick in some doors and so on and so forth, I think that if anything, it would just sort of improve the market as far as like make it more acceptable and mainstream these things. It's like saying back in the old days, it's like when Smith & Wesson was the only gun company, and then Colt comes along and has a gun, or vice versa, or Colt has a gun and somebody else comes along. But the point being that Colt was probably the first guns. So then Colt comes along, they've got a gun, and then somebody else, Smith & Wesson, comes along with their guns, and you say, oh no, it's going to destroy Colt's market. It's like, no, it's just made everybody want more guns. It's just set off a gun war, basically. Okay. I don't know if anybody, okay, somebody please tell these guys if the sound goes off, just try restarting the conference, because that seems to be the way it works. I don't know why anybody's individual sound goes off. Declan says, would you short YM as the news on UTX is now out? No, I wouldn't short the Dow because it's where it should be. If you take, if you add back UTX and you look at the effect, like I said, I would short the Dow if everybody starts breaking down, but I think it's much more likely that people are going to bounce here, so I'm more inclined to go long for the bounce right now. Okay, because we're back to like some lines that provide some good support. Steve says, stocks and bonds are supposed to be inversely correlated, however lately seem to be moving in the same direction, both up and down. Why? Oh, that's because the Fed's just made a complete mess out of the whole thing. I mean, all those relationships, you got to throw them out the window. There's just too much money floating around, and things are a mess. And the Fed is buying the bonds, and Japan's selling the bonds, and China's dumping the bonds. It's just, don't even think about it. It's an old school thing that's completely broken. It's a relationship that's just been trashed. And Stephen, yeah, that's the explanation though. It's you know, look, the Fed just buys every bond. Oh, also, by the way, here's another thing. Thanks to Obama, the devil Obama, the budget deficit has shrunk so much that we're not selling many bonds. So that's causing a demand for bonds that don't exist. There's no new bonds being issued because you don't need the money. So if we're not asking to borrow money, then you can't get U.S. bonds, and that creates a higher value for the U.S. bonds because you know now people are scrambling to get bonds. And you know it used to be that the Treasury would ask for like $80 billion a month. Now we're asking for like $50 billion or $40 billion a month. That's a big difference, and the Fed is still buying them all. The Fed is still buying every single thing that's printed. So it's a big competition to try to get yourself a bond if you want one. Moat, not a taser. Oh, Mo, a body camera. Okay, so it's something that competes with taser. Sorry, it wasn't an actual gun. It was a body camera. But the point is that's still taser's big market. Interestingly, though, if they're not making a gun, then I would have no fear of Motorola because that's silly. Because am I going to get a taser gun and work with taser and have a taser warranty and so on and so forth, but then stick a Motorola camera on my taser gun or to work in the system, like if you have it on your body armor or whatever. But either way, it's like you're going to not get the taser thing that belongs in the system and is all dealt with by the same rep, and you're going to purposely go out of your way to get a third-party camera? I mean, they may as well get GoPros, right? You can give the police little GoPros for $300. Let them run around with those on their heads. So yeah, I don't think that's a good idea. Body camera, unless they have significant advantages to what Taser's doing, and they might with Google, you never know. But if they have really significant advantages, it's going to be a tough sell when people already have the machines, the guns. Or it'll just be a different market. It'll be the market of people who don't buy, you know, the police who don't use tasers and don't have a relationship with them, then they won't do it. But where Taser's selling the guns, they have a huge advantage. What's your highest conviction trade or pair? In the case of a black swan, multiple significant. My highest conviction trade. Well, that's definitely our SDS. We have the SDS position. We have it in our options opportunity portfolio. Let's see. No, I do not want to take the survey. Whoa. What is that about? That's weird. We dropped 5%. It was like 15.5. We dropped 5% for whatever reason. But it's certainly a trick of the option prices. So I'm not going to pay much attention to it. Taser certainly hurt us. What was the question, though? We were talking about SDS, right? I thought we had SDS in here. Wow, that might be why. What happened to our SDSs? Or was it SQQQ? Oh, I'm sorry. Well, these are the NASDAQ shorts. We have the SQQQ spread. We have the January 25 calls and the short November 23 calls. I can't imagine which one of these positions is hitting us so hard today. We'll have to look at it later. SCO. No, SCO is the oil. That's a short on oil, which is going well. See, here's the funny thing about this stuff, though. See here how this is showing like a net zero. And the price of this trade is $12.80 to $15.90 is what? $3. So this spread is showing $3 of value. We paid just under $3 for it, so it's showing like no profit, just like $700 in profit. In reality, though, this is a $6 spread. It's 100% in the money. The SCO is at 83. So this thing should be showing, instead of $3, should be showing $6, which is $3,000 more dollars. And we're just going to have to, unfortunately, wait until the November expiration to realize the gain. But there's a lot of things like that in this portfolio where there's hidden amounts that are actually much more profitable than they look. I honestly cannot imagine where this money went, though, today. I'll take a look later and see if I can figure it out. Here's Taser, great for a new entry. Here's UNG, with long on UNG. Here's the SQQQ. In our short-term portfolio, though, let's see if that took a big hit. Shouldn't have. 255. So he's still up 255%, so he's okay. We have this SDS, the January 20 calls. They're down at 142, so that's cheaper than we bought them for. And SDS is at 20.73, so that has very low premium. You know, if 73 cents of this is in the money, and it's only $1.42. So you're only paying 70 cents premium for the protection. That's a good one. I think, oh, I see, we don't have the SDS spread anymore. We have the same SQQQ basically as we have in the other portfolio. And we have these TZAs, that's the Russell short. Nothing exciting though. So basically that's the way we're hedging though. These see how we have TZA April and SQQ is November, shorter term protection, and the SDS is January. So we have sort of like layers, month and 1 month, 2 months, and 3 months out. So we, I'm sorry, 1 month, 3 months, and whatever April is, 5 months out. We have sectional protection so that if we have a cascading failure, we can add more to the longer ones and start and take the short ones off the table. And the only way to really explain that is to actually go through it. But anyway, this is a futures trading seminar, so please stop asking questions about things that are not futures. All right. Do we need to do something to pay for our November 23 calls? Oh, the TASR spread, is it? Okay, so it's a TASR spread. It's a temporary thing while the stock is bucking around. Thanks, Dominic. Appreciate that. Steve says, in the option opportunity, do we need to do something to pay for our November SQQ calls? I don't think so, because I think that we may be in the, well, look at the things right now. We actually didn't hold those lines. We may be in the process of collapsing. What would you look for? A new TASR entry? No, the TASR entry we have in the option opportunity portfolio is fantastic. I wouldn't change that. What were we just going to do? Oh, failure. Right. Look, see, failing. 2020 failed. 44.20 failed. And we'll look at the more. So this is not good. So where I said we might be bouncing, we're not bouncing. And therefore, obviously, not going to be a good place to start going long or play with these things. Now, we could follow. Oh, I'm sorry. I did say what we wanted to do, though. We said if these guys break down, then we want to short the Dow because they'll start catching up. They'll say, who cares about UTX? This sucks. So let's go back to that because now we have a good example. So we're going to trade in our natural gases. Ooh, damn. I want to add more. We only have 4 longs. I would like to add more longs if we're back at 265. And keep our eye on that. YM. Now, this is good though, because now we can talk about what I want to talk about. So now I'm going to short, and shorting is easy. Just go to the chart and you click on it. 7107. I now have one short at 7107. I'm watching these guys. If any of these guys, if he goes over 2020, if he goes over 4420, if he goes over 1155, well, he's over 1155, then I don't want to stay short. Then we're back to our bouncing theory. And if we're going with our bouncing theory, I want to take whoever's the lowest in the channel on the bouncing, to pick them up for a bounce. That would be the NASDAQ. So I would play the NASDAQ to recover above 4420. But at the moment, I shorted the Dow. So I shorted one at 7107. If I want to short another one, I'm going to wait. And I'm going to wait for a good entry. And let's say, this is not looking good though. This is where I should be going long on the NASDAQ. So when I have one long at 7107, let's say I'd rather be short at 7120. Nope, that's not going to happen though. See, you have to be realistic. 7125 is right here. If we're over 7125, I shouldn't be buying more. I should be getting out. So what am I going to try to do? I want to average in. If I got a short at 7125, let's say 23, I would average 71, then 7123 plus 7 is 30. I would average 7015. So that's a reasonable goal. So what I want to do is add another one if I have to at 7123. That'll give me a 7115 average. And look, see if I would have hit it right, Right now, I could have gotten out at 71.15, and then I'd be back to one at 71.15. That's how you scale into a futures contract. Meanwhile, though, the entry was probably wrong because these guys, they spiked down a little bit, but now they do seem to be bouncing where we expected them to. Here's the S&P at 2021. He's over 1155. He's not over 4120. That's weird. So they're not really in any kind of conjunction or anything like that. So it's very difficult to say what to do. Now, at this point is when you should be going to check the news and see what's actually happening. I'm going to do that on a different screen to see if anything actually happened. If you guys know of anything that just happened, let me know. The MBA hiked their origination forecast for the year. The Mortgage Bankers Association expects 1.32 trillion mortgage originations, up from 1.26. Well, that's not very much up. It's certainly not worth rallying over. Nope, I don't really see it. So now I'm back to saying, well, I would like to be short then. If this is still breaking, we're going to see what happens. But you see, as soon as I enter, I'm looking to say, where am I going to quit this thing? I'm going to quit this thing at 71.25. But before we get to 71.25, I would take a stab at doubling down at 71.23 because that would average me at 71.15, where I have a much more realistic chance of getting out with a profit. As it stands now, we're watching the 2020 line. I want to see that breaking down, but it's not really breaking down with any kind of conviction. He's not breaking down with conviction. So I'm not loving this trade. I might not have gotten a good entry. But on the other hand, the fact that they failed at all is a very bad sign. So once you're in a futures trade, then you've got to watch it like a hawk, though, because you can lose a ton of money really fast. That's a very important concept. But you notice how nice the 2020 line is, because it gets very sticky. And that means that you have plenty of time to get out when you're wrong. Also, 1155, plenty of time to get out if you're wrong. 4420, plenty of time to get out if you're wrong. This is good, though. Now we're getting a big fail on the NASDAQ. And we might want to check with Apple. What's Apple doing? They like failing or something? But you're always looking to make sure you have plenty of confirmation of what you're doing. Okay, Apple was kind of rejected at 114, but that's up like almost 2% for the day. So he's down 0.86, he's down 0.38, he's down 0.40, and he's flat. So now we're getting back to where we started. And now I have to say, do I want to get out of it? Do I want to stick with this or do I want to give up on it? It didn't work out the way I wanted it to. I thought we were breaking down, but we held up pretty well. So maybe we just give up and take the $15 loss, $10 loss at this one, $15 loss, $20 loss. See? So no, he's holding 2020, and it doesn't look like this is a good idea. So let's see about getting out of this thing. What the heck? There it goes. All right, so I took a $40 loss. That is the most important thing about the futures, though. If it doesn't go your way, get the hell out. Okay, you can get a better entry some other time. So what we found out now, though, is Dow had way too much support here. It blasted back off this line. All right, so we don't want to make a new entry there. We might make an entry if they come back up to 71.25 and fail, but only if I have confirmation from my other pieces. And I'm not getting it. I'm over 1155. I'm over 2020. I'm over 44. Well, we're not over 4420, which is strange. But here comes Apple. I'm watching Apple on a different screen. I don't have enough screens here to show that. But here comes Apple, which means maybe it's a good time to get long on NASDAQ. Let's see what we do. 113.70 and stuck. Nope. If you're trading the NASDAQ, you got to watch Apple like a hawk because that's where the money is. So now he's below and he's not below, and he's below. So now I would be shorting if the Russell goes below 1155, I'd do that one. But now he's above 2020, so no go. You got to have your confirming indexes so you see what you're going to trade. And this is not, by the way, a great point to trade. Okay, if we're going to have a breakdown, it should be a pretty harsh breakdown, not a little breakdown. And it really does feel, though, that we're going to go lower. 44.15. This line's got to break. This 44.14 line's got to break. And this line's got to break. See this green thing here, 2018.50? That's got to break too. Otherwise, we're just going to be treading water around here. And how long do we have to the close? We have 2 hours to the close. And now we want to see if we have any special news or anything going on. So back to there it is. See, when you have today's news, today so far, you have to refresh it yourself. Lionsgate film, who cares? We care. We like Lionsgate, but whatever. Tesla lower after consumer report. Reliability, honey. After they talk about their consumer reports reliability, it's an issue. Oh, that's a shame. We don't like Tesla. It's a stupid company. Grubhub, who cares? Box office websites crash after. Oh, wow. Okay, so who makes Star Wars? That's the question. And it's Disney. Box office websites crash after Star Wars goes on sale 2 months in advance. There's the buying premise, right? Let's take a look at Disney. You know, if you're going to be a trader, this is how your mind has to work. You got to be immediately, how does this affect my stocks? How can I make money off of this? So Disney's already plowing back up here at 109. I'm shocked. Did we? Well, I'm sorry. We are long on Disney because it's in our butterfly portfolio. That's the butterfly portfolio. Wow, that thing just keeps going up every day. So Disney here, what we have is, oh no, we sold these 120 calls. Shoot. We have these longs, yeah, but we sold the 120 calls. We have the 80 calls, we have the 110 calls. So this is a bullish spread that we expect Disney to be over 110, which it is. We have the $90. We have the $90 puts. This is a very bullish position here on Disney. But these guys, I might even start getting worried about, though, because we sold the 120 calls. We thought they wouldn't get back to 120, and they might. So we're going to have to think about that. We thought this 120 line was going to stop them, but when you see a number like that, when you see 2 months in advance, the machines are crashing for Star Wars, that's a tricky thing to sort of be short on. And we're not really short. We got plenty of, we're plenty long on Disney. We just thought that it would stop at a certain point. And maybe it won't. So I think possibly we might want to lighten up these at least to drop them to 20. We might want to sell some short. Oh, no, that's a good solution. We can sell some short puts. That's a good idea. So what we're going to do to be more bullish on Disney is we're going to sell some January puts. So we go to January, we go to Disney, DIS. All right. And now we're going to find January. And okay, so we already sold these calls, and they're not very expensive right now. So we're going to take some off the table, I think. But we already sold these January calls. We should probably sell some puts. So we could definitely sell these guys. We'll sell the 97.50 puts. Let's sell 20 of those for $1.50 because I don't see any way at all that Star Wars is going to come out and Disney is going to tank. And that's a pretty good spread. That's $12 below where we are now. Or, yeah, right here, about $12, whatever. So we're going to sell in the butterfly portfolio 20 of the 97.50 puts for $1.50. And it's really easy to do when you have a Thinkorswim, because all you do is you right-click on the spot, you say sell, and you say single, and then you tell it 20, and then you tell it $1.50, and you confirm it. End of story. I can't do it on here. It's not the right system for it for me. And you see that it has a, it's going to hit your buying power by $12,000. You make a max profit of $3,000, but it won't really hit our buying power because we're already short the long. So it's actually going to offset the position we're already short on. And so we're going to do 20 of those, and we're also going to cut the other side down to 10. That's going to be the trade. So someone remind me to make that official when we finish the seminar. And now we'll get back to the charts and see how things are going. So I didn't leave an open trade, did I? I would not be happy about that. No, I did not. Okay. Oh, here we are. See, 71.23. Damn it. But everybody looks stronger, so now it's not a good shorting line, unfortunately. And which one did we say we would go long on if we wanted to? We'd go long on the NASDAQ. So we look over to Apple. Apple's at 113.83 now. If Apple gets over 114, these guys are going to be in good shape. We missed our opportunity here to go long. But now things are looking up a little bit, so I think what we want to do is let's give it a poke. We'll take a poke over here at 21. Oh, not filling. Oh, there it goes. Okay. So now we're long one at 21. If we get down to 20, I'm going to assume it's going to hold. I'll be very happy to go long another one at 20. Let's say 20.25. Whoa. But it's like they're listening to me. All right. Oh, 20. Now, just I said 20.25. If it's going down, I'm not going to be an idiot. I'm going to wait and see how low it's going to go. And this looks like it's holding, so let's pick that one up. Seriously? Okay, so now we have two long at 44.20.50. I'm going to now sell one because I didn't want to be too long. I only want it to be one long. And I just bought the other one to lower my basis. So I've got a sell order in here. So if we pop back up, I'm going to get back to my original position, which is I want it to be long one. So meanwhile, while I'm waiting for that to happen, I'm saying, well, what's going on here? Why did that happen? Oh, look at that. It filled. All right, so there goes the one. See what happened now? So now my basis is 44.20.50. Oh, I'm sorry. No. I'm sorry. It's because I sold it. It's 44.19.75 is my new basis now. Because we sold it, we got the cash, and now we have a lower basis. So now we're making money. And now at this point, I would put a stop at 44.21. It's going too fast. I would put a stop at 44.21 to lock in some gains. And you see P&L from the open, P&L for the day. But now we're going to lose it because it's falling. But that's it. And if it takes off and you get lucky, you're going to make a lot of money. If it doesn't take off, you get out quick and do it. I don't have conviction here, but I am watching these guys at 2021. He's okay. He's okay. He's okay. So I don't think we can get out of this one yet. I'm looking at Apple. Apple is 113. Oh, 113.90. We just need Apple to go to 114 and we'll be in good shape. But again, if the position isn't working, oh, I was just going to say take it off. If the position isn't working the way you expected and it's sort of, fuddling back and forth, then take it off. Okay, then just take $10 and leave. Say, great, okay, I made $10. Bet on losing $10, right? It's not doing what you want it to do. What we've got is a consolidation here. I wouldn't be trading this at all if we weren't doing the seminar. So it's not the best habit, but I'm just trying to find a spot that I can show you some actual trading in a futures trading seminar. But the most important thing I'd say is just don't pick positions for the hell of it, which is kind of what we're doing. So you see here, there you go. Got a nice move up, and I'm not happy with the trade, so I would love to get out, and I'm going to say sell. Oh! And as soon as I hit it, it fell. Damn it. Oh, wait. Ah, I really would have liked to have made $25. But anyway, so I'm not panicking because I don't have any real weakness here. And Apple is not failing. Apple's 113.83. So I think there's an inclination for the NASDAQ to go up. It's just having a lot of trouble. But it looks like there's a lot of selling pressure right about here, 21.50. So what has to happen is that, and you can see it also, by the way, you can see these numbers, see the ask size? The ask size is bigger than the bid size. So if the bid size is smaller than the ask size, that means you're going to have a lot of trouble getting past this number. You have to fill all these requests first, then you have to start filling those requests, otherwise you're not going to get filled. See that? 4125, you're having a lot of trouble. You can't fill these guys. If you can't fill these guys, you're not going to get to my number. So I'm going to take mine off because it's unrealistic. And now we'll see. So realistic is maybe where they balance out. 16, he can take him. It's like playing risk. You know, he can take him because he's got more. He can take him because he's got more. But he can't get taken. So really, this is a realistic selling point for me. So I'm going to sell. There you go, 20 bucks. All right? That's how it works. I was having an unsatisfactory experience in my futures long. Although I felt I picked a good entry point, it wasn't behaving the way I wanted it to, so I get out of the position. All right, and there's no regrets, because if the NASDAQ shoots up now, then I look to see who else is behind. So if the NASDAQ pops over this line, this green line, I say, well, who hasn't popped over their green line? Well, everybody has. So that's why I want to be long on the NASDAQ. He's lagging. But he's not lagging. He's not lagging enough where he's making a good short. He's getting rejected at this line. Is the problem. So I'm still watching now, 21.21, here and here. I just keep my eye on all of them. And again, now 44.20, which is where we kind of want to be long. But it's not holding because I get red signals everywhere else, so I'm not going to go long here, although I kind of want to. Apple is, damn, still can't get over 114. See, Apple's getting rejected at 114. That's what's killing the NASDAQ. And you have to know that when you're trading all these things, you have to know what drives them. What kind of things drives them? What else drives these guys? The dollar drives them. The NIKKEI drives it. Here's the NIKKEI. The DAX, the German one, drives it, which is not a futures, unfortunately, you can watch. Here's oil. Oil drives the Dow because Chevron and Exxon are big components. So oil is very, very important to the Dow, and oil is doing terribly. And the NYMEX is closing shortly at the low of the day. Natural gas doesn't matter for that. The dollar is very important, though. The dollar is flat for the day, so that's not helping. Gold is flat, doesn't matter. Silver's flat, doesn't matter. XLF, they're okay, but nothing special there. The VIX, not much going on there. It's actually up for the day, though. It actually, went up pretty sharply considering it's a flat day. And here's our buddies at Apple struggling to get over 114, killing the NASDAQ. How is the NASDAQ going to get confident if Apple can't get over 114? So we go back to the close-up view, and we'll wait. All right, so let's see if we can get a couple of questions in while we're waiting and see if it resolves one way or the other. Okay, TASR, SQQ. Are you trading what? The Wall Street December 5th? What the heck is that? Why not the live index of the November? I have no idea what you're talking about. What's the Wall Street December 15th contract? You mean for natural gas? If you're asking about natural gas, we're not trading in November. It's because they expire in like 8 more days or 7 more days. So we'd rather be in the December contracts. That's all. Declan says you showed all the Dow companies when you were looking at UTX. Can you bring it up again, please? I guess. It's just DJI, the symbol on that. It's oh, you have to use an up arrow. It's the thing above the 6, that thing, and then DJI, and that's what it is on Yahoo. And then you go to components, and that gives you the list, and then you can see what's going on. Look at IBM. IBM down 8. So now IBM down 8 is responsible. Multiply that by 8. They're responsible for 64 plus of the Dow's 15-point loss. So if it wasn't for IBM, the Dow would actually be positive today. You can look at it that way too. I mean, say, okay, take out UTX. So you throw out UTX and throw out IBM, but you still have, because IBM is down so much, you still have IBM doing about 30, 40 points of damage. Even if you average it out with UTX. So IBM is really killing the Dow today. But everybody else is weak too, so it's not like the Dow should be higher. You can see how they're struggling there, 44.17. But these guys are not. It's just the Dow is showing a lot of weakness. So I guess basically what's happening into the close is IBM fear is trumping UTX enthusiasm over their buyout. And it should, frankly, because I don't get excited when a company takes $12 billion perfectly good dollars and they can't think of anything better to do with it than buy their own stock. It's like, what? You can't acquire somebody? You can't find something to do with $12 billion that's going to improve the value of your company rather than buy your own stock? I think that's nuts. I mean, I understand if when Apple was $85 and they had $100 billion of cash overseas, I would have taken the whole friggin' $100 billion and bought my stock back. Because that was idiotic. That was an idiotic price. I understand that there's certain things like that. Warren Buffett has a line at Berkshire where he says, I'll buy my own stock if it gets to this price, because he knows it's the best stock on the market. Plus, Berkshire, though, is it's a diversified way to invest. You're not just picking one thing. But when you're a company with $12 billion like UTX, and you reinvest in the same crap that you're already doing, you're doubling down. You're doubling down your risk also. You're doubling down your exposure. So I'm not a fan. I don't understand why that's being done. So let's take a look at UTX. Boy, this is slow. Ever since they changed, when they changed Thinkorswim, it became a problem. Slow down this whole computer. Nothing going on over here. Still going to work with Apple. What is this? Really? All right. TX. Not bad. I mean, they're like $85 billion. Probably dropping, more than $6 billion. $6 billion to the bottom line. That's not bad. Why are they doing this with their cash, though? Do they have so much cash? They don't even have that much cash. They're borrowing this money. They're financing so they can buy this stuff. Their cash flow. Their cash flow isn't that great. They pay a dividend, 2.75%. This will effectively increase the dividend unless they lower the dividend to match the shares. It's not for me. It really isn't. I don't see the point. They're going to push it up to $100, which is going to be. This is the thing. Now you're artificially pushing the company up to $100 a share, which is going to give you resistance. It's probably a good shorting spot. I just don't like the way they do that. I really don't. But even if I'm not playing UTX, knowing that they've artificially put themselves up to 100, knowing that they're a Dow component, I have to take this into account in my Dow calculations now, right? They're going back to 100 because here's the thing. See what they were doing? They had to get themselves back over the 50-day moving average. This is the kind of company that watches their charts. So they wanted to get back over the 50-day moving average. They were struggling here. It would have looked bad if they didn't make it. They're struggling here, so they announced a buyback. That pops them right over the 50-day moving average, and now they think, theoretically, it should give them support of the 50-day moving average because they said they're going to buy their stock back at that price. So therefore, that should make it a much stronger support, and that will help them consolidate here for hopefully a move back up over 100. So I can see what's motivating it, but unfortunately, I'd rather see them just grow their bottom line. I'd rather see them say, well, you know what? We're acquiring this company, and now we're going to drop $8 billion to the bottom line instead of $6 billion, and then we'll take the same 12 multiple, and we're over 100 anyway. That's how you get over 100, because you actually have. Don't you feel better owning them if they're making $8 billion than if they keep making $6 billion and going $10 billion into debt so they can buy their own stock back? It'll be divided among less shares. That'll be good, but on the whole, I'd rather see them try to grow the damn company. And they got so many divisions, I can't believe they can't find a single thing to do with it. It's very sad. Does not speak well of the market, by the way. They can't find something to buy. Oh, and now everything's popping. See? Damn it. So who's behind? It's okay. Even though we missed it, the NASDAQ is still behind. The Dow, the Dow did exactly what we thought it would do, except it took too long. But you can play the Dow over this 25 line, or you can play the NASDAQ over 25. I'd rather play the NASDAQ over 25. So we wait for it to get over 25 to prove it can do it. And then once it's over, that becomes our stop line. So we want to see the Dow holding its 25. We want to see these guys hold. They're not making it. Oh no. Oh, so sad. Okay. So now we're having problems here. That's not good. Now I'm going to do a close-up here. Click, click, click. And you see where we're failing? Right on that line. Right on those dotted line there. That's called support 1. That's your support 1 line below in the trend studies. Here's 25. See? Over 25. Do we have up? I'm on the wrong side. Should we play it? What do you think, guys? Oh, by the way, this is the thing. You don't want to overpay. You don't chase it. It's like if it goes past you, you say, okay, well, I missed that one. Who's next? If he's over his line and he's actually going to go up, then you don't need to chase him up. See how it failed now? You don't need to chase him up. You just say, okay, well, if he's going to actually keep going up, then who didn't go up over their line yet? And I see that the Russell hasn't gone over their line, different line, but the Russell hasn't gone over the pink line. The S&P hasn't gone over the pink line. Therefore, if he's over his green line, I might want to pick one of them instead. I originally wanted to pick him, but if I missed it, then I missed it. I didn't miss it. Now it's back to where we wanted it. But now because it didn't make it, it didn't stay over, I no longer have a lot of confidence in this line. So let's give it a shot. Boom. There, one position. That one position is at 44.25. So now I need to go over 44.25 to have a successful trade. If we go down to 44.23 and I add one, then I'll have two at 44.24. So I might add one here. Oh wow, look how fast it's going down there. That's not a good sign. Still, I want to show you how it works. So I know I have one at 44.25. If I buy another at 44.23, my average is going to be 44.24, right? This is called scaling in, or it's more laddering in when you're doing it this way on the futures. And that's why it looks like a ladder, right? You can see how it is. And I'm watching here 22, 58. You got to have your mark set. 21. Oh, let's watch Apple. Seeing some eyes up at Apple. We don't know what they're doing into the close. And now we're getting to that magical closing time when you have these big run-ups. Apple still can't get it together. Geez, 113.77. So again, we're struggling to get back to my 25. Now I'm watching this count. I like it because I got strong numbers here. I got 60, I got 50, I got 20. See how it's working? There we are back at my line now. Now we're over. Now we made $15 more. 20. All right, I'm going to take that because I don't like the way it's going. There. See, now I made 45 here. I made up for that loss. You see what I mean about taking the profits quickly, though? So now I'm back fine. I'm up 5. I'm up net 5 now on the trade because it's not going well. So why should I keep playing it if it's not going well? It's not moving quickly one way or the other. There's no definitive. See how it's dropping now? There's no definitive place where I can say I see very, very strong support, or these things are not popping right over their lines. Apple is the strongest stock in the market, and it can't get over freaking 114. So there's not enough enthusiasm here for me to really want to be long. But you see how easy it is to just make a little quick $50 here and $50 there? It's also easy to lose $50. But if you keep it under control, you live to fight another day, and you can make another entry and another entry, and you just keep looking for good entry spots. You know, and again, this is not an optimum time to play. I do not like playing like this. I like to play at the top or bottom of the channel, and otherwise I don't play at all. Unfortunately, though, this happened at 11, and we started our seminar at 1, and it was just a bad spot, and we're still in the same bad spot. So we don't have, it's not a particularly good time to be showing you exactly how it works. I just wanted to give you an idea of how you get in and out of these things very easily, though. And by the way, people who are starting the futures, here's the thing. When you buy one of these contracts, see here, the margin requirement is $4,400 per contract. But you get the margin right back when you sell it. So, you know, it's taken out when you start and given back when you sell it. $4,400 a contract. It seems like a lot of margin, but realistically, you're going to be able to use that money to make $100 in 5 minutes. So that keeps it in perspective. Okay, the $4,400 doesn't matter. You have to have the margin, of course. But the $4,400 doesn't really matter. What matters is whether you make or lose some money on the trade. It's not a lot of margin to tie up, considering how fast you're going to make this money. You know, you think about it as a rate of return, like an interest. So that's not really a huge consideration, but you do need the margin, especially if you're going to go like I do. I like to buy one, then buy another one, then sell, then buy, then sell, then buy. You get your margin back every time you lose the contract, so you can go in and out all day long. It's not like day trading. There's no penalty for doing this stuff. I take that back. Actually, I don't know. I don't think you can trade futures if you have so little money, which I think is like under 25,000 or under 50,000. If you have so little money that you could get marked for day trading, you shouldn't be trading futures in the first place. Put it that way. But you know, basically, if you're trading futures, and you shouldn't be in danger of being a pattern day trader. But I'm fairly sure that futures don't count towards the day trading requirement. But either way, the idea is you're going to get quickly in and out of these things. You're not going to lose. We can lose, obviously. You can lose $4,000, but you have to be careless to do it. And this is what we're trying to do: is teach you not to be careless. So, you know, and again, there's not conviction here. At 44.20, I feel better about being long, but even so, I'm looking here and saying, well, I went all the way to 44.14. So I can't have too much conviction. That's a big drop. That would be expensive. We're not getting them burst out. Once you get to this level, I expect to see at least somebody should be taking off. I want to see one of these guys lead us higher. And it's not happening. That's weak. And if it's weak, I certainly don't want to be bullish when it's weak. So unfortunately, and I'm sorry, I wanted to demonstrate this, but it's just not giving me a good opportunity. And I don't want to be short here, because I think that this line, 44.20, and this line, 20.20, and this line, 17.100, I think these, and 1155 over here, these are good solid support lines. And also, and again, you have to be aware of all these different things in the market. Also, the tendency of the market is to go up into the close. How many times do we see that happen? Look at, I have that day Friday chart up here this morning. What happened, right? 1 o'clock, right about here, see 2:30? And then boom, all of a sudden, everybody has to jump into the market. This is what we'd like to catch. We'd like to participate in this. That's a nice move. This is 202. You know, this is 2025, let's say, on the S&P, and we go to 2030. That's 5 points at $50 a point. That's $250 if you catch that move correctly. That's what we're playing for in the futures. If you have any questions. Oh, the Dow. Okay. I had no idea what you're talking about there. The Dow, December 15. Why not the wide index? No. I like to trade the standard ones. That's why they're actually the most liquid. So that's why I trade those. Like YM, ES, NQ. They're just nice and liquid and easy to trade. And you can get quickly in and out, and there's no hassle. I mean, the other ones are okay, but, you know, it's just simpler for me. And also they're the ones that match up exactly with the charts. So when I'm talking to people about the charts and I want to show them stuff, those are the standard charts. That's also important for my purposes. Because I'm really trying to teach people. I'm not trying to do it to be a trader. I'm doing it to help people understand how this stuff works. And Flo says, how many points on the line do you generally use to confirm when you should stop out? Ooh. Again, the key point is that it's not about a line. I mean, yes, I want to have a good stopping line. And that means I don't want to enter unless I have a good line to stop at. So that's number one. So if I'm going long, I want to know that below 44.20, I'm pretty much going to get out. But looking at this says, no, that's not a smart idea, though, because if I'm going to get out at 44.20, it's already been below that line. So this might not be good support. Here's good support. 17,100 is good support. Here's good support. This line over here, 2018.50, I guess it is. Yeah, about 2018.50. That's good support. That's held solid. So those are lines where I want to go long. And so I have to wait. And down here too, see 11.55. I want to wait and catch 11.55. If I don't get 11.55, then I shouldn't get in. I only want to trade when I have the support. If I don't have the support, I don't want to be in the trade. Because I need that support to help me get out. I need a strong place that says, this is where you can have a little bit of confidence going long, and if this fails, you know it's a bad trade, so get quickly out. So you have very, very low tolerance for failure. And again, I want to line everybody up, and I give a support line to everybody so that I say, okay, everyone, he's got to be above this, and he's got to be above that, and he's got to be above that, and he's got to be above that. And if any of them fail, I'm out. Whether I'm up or down or sideways, I'm getting out if any of them fail. So here we are, over 1160. I mean, again, the pattern is usually that we go up into the close. Here's a down making some progress. Here's suddenly now we're taking off. So let's take a whack now at the Russell and see if we can get a bullish move off the Russell at. Whoop, good. As long as it's going down, we're not going to jump in here. Okay, right there, 1159. So now we're long on the Russell. The Dow took off nicely. The NASDAQ broke over his line. So I'm picking up who? I'm picking up the lagger, right? The S&P, he's having a little bit of trouble, but I think he's only having trouble because that's a tough line. See that line? That's a tough line to cross. Once he crosses, though, that'll be good. We're just on our line. He's in the middle, so he doesn't matter that much. And the NASDAQ also just over the line. So now I want to see all these guys over their line, so I feel good about this trade. And then what we're hoping for is the usual bullshit move up into the close. And like I said yesterday, that was good for a $500 move for the Russell. So, if I want to average 1159, I want to add one at 11587. Say at 593. If I add another one at 11587, whoa, damn, that was fast. All right, we'll take it. Now I have 1158950. Now I can get out here. I put my sell in immediately. I only want to be long one. I don't have that much confidence. I only want to be long one position. So now if I get called away, I'll have one at 1159. I'll be happy. But meanwhile, look, this is not going well. He's got rejected. He's below his line. He's where he is. We're below our line. It's not going as well as I had hoped. But my bias is long because we usually get a run up into the close. That's why my bias is long. So I'm hoping that pays off. So we're going to watch and see what happens for a bit. And then I'm going to go back and check the news over on my other machine so it doesn't bother the chart. And again, always check the news. What's going on? Oh, we're working on a really cool news feature for Phil Stockwell from the, we're going to hopefully be able to partner up with these guys that run the Squawk Box on Wall Street that the traders use. and we're going to be able to incorporate it into our chat room. That'll be awesome. We'll get a really incredibly up-to-date news feed. Intel, 3D NAND, Micron, -10. Okay, so Intel is planning a 3D NAND investment which killed Micron. They dropped 10%. Canada, blah, 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 don't care. GM, Lions did again. Nothing. There's nothing going on. God, there's no news at all driving this. We're just drifting along. If I had more conviction, I would be adding more here, but I don't. Okay, if we were at the 155 line, I would feel that was better to hold. But we're not. So as it is, and look at that, 110 bucks already down from this. So hopefully, I'm really hoping now it breaks back up. Otherwise, it's going to be an expensive demonstration. But I certainly don't have the conviction to add. If this thing is breaking here, that's not going to be pretty. Unfortunately, we caught it right on the spike up to one. It didn't quite get over 1160, and unfortunately, that's been a failure point. So we're watching what happens here. Apple still cannot get over 114, and it's actually losing ground now, 11365. So Apple is losing ground. But I think that we're still going to go up. I think, in fact, that the reason that we stop, I think I'm not the only one buying here. I think you guys have been buying some. And if you guys are buying some, they're going to try to push it down to get you out. And you think, that's crazy. They don't do that. And I'm saying, yes, they do. They absolutely do. And there are robots here that are programmed to spike out anybody who dares to buy a contract. And that's the first thing they try to do, is to get you to stop out, which is why it's very good when you scale in. If you scale in, you're using that to your advantage. If you don't scale in, you just got your one contract. If you set a tight stop, they're going to try to blow it out for you. And most people, that's how they trade. Most people trade the futures with one contract, with a tight stop, and they get blown out all the time. And once in a while, it's like a slot machine, but once in a while you get lucky and it goes your way. But mostly you get blown out of your tight stop. And again, that's why you need to play the serious support line. We made the mistake right now of entering below the 1160 line. But I thought above the purple line would be good. You know, we got above this purple line at 1159. I thought that above 159 we'd have a good chance at 1160. Oh. Meanwhile, my sad story turned happy already. You see what happened? So we popped back up. I had my sell order in, so one of my contracts disappeared already. Now my basis is down here at 115860, and now I can take a profit here, 70 bucks. But I'm not going to take a profit unless 1159 fails, because I think we can go higher. We're going to see how he popped. He's just struggling right there. He might go up 115940. And I'm watching here, 15 is better than 10, 13 is better than 12, 28 is better than 23, 35 is better than 25. Looks like the pressure is going my way. Okay, but these little jerks down make me like worried, so I want to see what happens. It's not good it's not good when you get a sudden move down, like boom, like that. Very tempting to take that. I think I will. It's just not solid enough. I'm not happy about it. Oh, I was just going to say the numbers are not on my side. See, as long as the numbers are on my side, but they're not. You see how these numbers are building? So I'm going to get out. See what I'm saying? These numbers are getting bigger. These numbers are not bigger. These numbers outweigh these numbers. There's more people selling than there are buying. And I already had a profit. I made 40 bucks. So why would I care? See how that works, though? You got to have an itchy trigger finger. Because, you know, you see what we did today? Lost 40, made 45, made 40. So we're up, what, 45 bucks? Okay? It's not exciting. We didn't catch a good move, but it's all, and again, I knew that when I was going in. I knew these were crappy positions when I was going in. But the point is, we didn't catch a good move, but we still eked out a little profit, and it's okay though, because it's like baseball. Okay, if you just get a few hits, it's okay. It's just once in a while you get a home run. But you've got to try to hit the average for the most part. You can't just always swing for the fences because those losses will kill you. You don't have an unlimited amount of swings. So if you make a little money, if you lose a little money, try to get even. If you make a little bit of money, try to keep it. Okay, you'll catch a big one. Don't worry. As long as you're careful and you stay in, once in a while you'll catch a good one that just keeps going up. But you can't always play for it. You can't be not satisfied to make $50. All right, and like I said, I mean, look, and sometimes you have conviction, like this morning on on NG. I made that's this morning. I made $2,900 this morning on that trade. Now on Z5, remember I said I wanted to buy more 265. We never got there. So on Z5, I'm up $1,000 on Z5 now. I don't care. Here, I have conviction, though. I'm not getting out of this. I'm not trying to take quick money on this. I wanted to buy more. If we hit 265, I would have bought more. So those are conviction trades. What was this? A Dow? Yeah, YM. So those are my conviction trades. I don't have conviction here. And if I don't have conviction, I'm not going to make a big play. I don't need to. I got a home run. And that's how it works. And if you don't like the way these are going, you look at your chart again and you say, well, is there anything else that looks like a good trade right now? Who else is a good support level? And I look and I look and I look. And if you do it, believe me, if you do it, you see them, you'll know your numbers after a while. You'll start getting used to like saying, oh, he's at my sweet spot. Like we just had a conversation about whether or not I want to be long on gas here, and I said no, and we actually did hold 125, but I don't trust gasoline here at all. Here's natural gas, here's TLC, whatever. We had silver a few weeks ago. I forget, was it 14.50? It seems hard to believe now. Silver was anyway below 15. We're long on silver. Anything under 15.50, we're happy to start taking folks long. We got down to like 15, and we went long on silver. It's huge money on that trade. But that was conviction because we hit a point that was so ridiculous that we were willing to stick our necks out for it. Those are the trades you wait for patiently to come up. This is just messing around. When you're in between lines, it's just messing around, and you've got to realize that. And so if you make $50, $100, $200 while you're waiting for all your other stuff to come through, that's fine. Now, what did we do last time? We started at 160, and then we added one at 159, right? And that was our play. So now, if we start at 159, that wouldn't be so bad. So I would be willing to start at 159. I don't think I'm willing to start much higher than 159. Because everybody still looks okay. He's holding 71.25. He's holding his line over there. He's holding his line over there. So if we can get you I'm too cheap to pay. I'm not going to pay that. It's too much. 159.60. Even though I think it's going up, I just don't feel good about it because I don't feel like getting into that situation again. But if he gets over 160, then I might want to play it, See, it's a funny thing, right? I won't play it here. But if he's over 160, then I can play with a stop at 160. See, now he's over 160, so let's do that. Now we'll go in 1. Oh, I did so. Okay. So now we go in 1. It's at 160.1. And now I can easily say, well, I'm definitely going to stop out if 160 doesn't hold. So you see how that decision process is? I'm willing to, that's because that's a good support line. And look what happened. Look at that. Yay. Oh, that's nice. $80. $100. That's how fast you make $100. $120. Oh, $140. See, that's fun. This is what I mean, though. You just got to, if you make sure you take those small losses, you got plenty of time to play. No, screw you, I'm happy. Oh, what? Did not take that. Oh. There it is. Oh, seriously? There it goes. Okay. There, now I'm happy. $160. All right. That's how it works. So you see what we did? We took a couple of crappy plays. They didn't go well, but the point is you live to fight another day. And then I caught one. But it's always the same logic. I found a good spot to enter. I said, okay, over 160, because if it goes even a tiny bit under 160, I'm going to get out. And that means my risk is very low. But look at my reward compared to my risk. I was going to risk 10, 20 bucks. Anything under 160, I'd be out of that thing. But instead, it did go my way, and I picked up 160, well, not 160, I picked up 80 more, I forget what the number is, but picked up 100 and something more dollars on that particular run. We already had some money from the other one. That's it. It's not complicated. It does take practice, and especially a discipline about trading on the line. So that's the hardest part, is it's a discipline, and you have to realize that you're gambling, and all the bad habits that gamblers have, you have to make sure you don't get them. Because you just got to be patient, and you've got to play slow, and you've got to be sure, and you've got to have a definite exit strategy, and you have to understand that you are very likely to lose. And the way that we give ourselves odds in our favor is we find strong setups with good backstops to stop ourselves out. We take very quick losses, and also though we pay attention to what's going on in the news, so that we know if the situation is, if there's something more bullish or more bearish going on that makes a difference. And also we pay attention to trends. Like there's usually, I won't say always, but there's usually a push to go higher into the last hour and a half of trading. Somewhere around 2:30, there's usually a push to move the market a bit higher. So we want to catch that wave. So we were looking for something to be bouncy. We had a good indication from our indexes that they were going to hit some support lines. See, support line, failed support line. Generally, though, we had a bouncy situation where we thought we were going to get a bounce. Also, on the 5% rule, told us to expect a bounce around here. So we had enough stuff lined up that made us confident enough that we were willing to make the trade. And if you don't start with that, you're going to get screwed, because then you're just guessing. These pictures don't mean much, except in the context of giving us an entry where we already think that we want to get an entry. Is that clear? Now see here, we're coming back to test 160 again. We can actually do this again. You don't like to buy something on the way down. You prefer to buy things when they're crossing up. But we'll see how this line holds at 160 if we get there. And if we don't get there, we're just not going to get to play. But again, what do we have here? 50, 40, 40, blah, blah, blah. What do we have here? 30, 30, 30, 50. So there's not really a 50 until we get up to here. So I would think, it's not panning out, but I would think that generally we got a pretty good strength here. That means that I don't think we're going to get much below 160. So if 160, if we come close to 160 and it holds, that's going to be kind of nice for another entry. He's still over. He's still over, but pulling back a little bit. He's still over, but pulling back a little bit. So it's confirm, 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 confirm. Now, I'm not watching the news. I wish I was, but I'm not watching the news. But damn it, right when I'm saying it. So I was going to say, let's just try one. Let's just try one right here at 160.2. 4 and 4. Nope, less, and I'm going to hit it. Oh, way to go. I failed. I did something. It didn't catch my trade. Clicked it wrong, or I moved the mouse when I was pressing it. Whatever I did it wrong. 14, 14, 17, 14. See how that works? It built up. There were more coming in. But here, there's some secret sellers here. See this selling, but it's still selling because you can't see them, but all of a sudden the thing drops. Whoa, now it filled my long. So it did have my order. I just couldn't see it for whatever reason. That's the think or swim problem that shouldn't have happened. All right, so we got our fill at 160.2. We're out below 1160 for a $20, $30 loss, but now we're up already. 1167, 1168, 1161, victory. Now it's our stop. So now our stop is 1161. Up. 8 and 1, 7 and 3, 9 and 2. Not looking good. Get out. Yes. See that? Now 230. It's like betting on a horse race, except as soon as your horse is ahead, you can get out. You know, or if your horse doesn't, or if your horse is slow coming out of the gate, you can get out. You can change your bet in the middle of the horse race. You can pick another horse. If you don't like the way it's going, you can pick another horse. You can change direction. You get more information while you're doing it. You see, I hit a perfect exit there. That was exactly the right time to get out. So that's the fun of it, you know, because you can make a lot of money. You can make an incredible amount of money if you get good at it. But I got to tell you, though, don't think you're going to jump in here and trade like this. I'm really good at this stuff. I'm very good at picking my spots, and I have a very, 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 very good discipline for trading. This is stuff you have to work on over time, but it's worth it. I have to tell you, it is worth it to learn how to trade the futures. And the most important thing about trading the futures, though, is you can do this after hours, and you can do it before the market opens. So when you hear news that you think is going to move the market before the market opens or after it closes, you can still make a trade. That's huge. Especially when you hear something that's going to damage your portfolio, you can actually make a hedge against it. And that's another reason why you want to understand how these things work. The relationships between the futures and your portfolio will help you balance your portfolio in the off hours. You have the ability to avert a catastrophe. If the whole like if something blows up somewhere, if God forbid there's a terrorist thing that downs a plane or whatever, and you say, oh my God, the market's going to start collapsing, you can jump in and short the futures. And it's going to protect your portfolio. That's huge, right? I mean, you would want to be able to have that kind of insurance. You know, understanding this stuff is really important, and it's such a great tool. It's such a shame more people don't do it. All right, time to wrap this up. We've made lots of money. Wait, let's see if we can get a total. We got 230 and 235. Okay, that's not bad. I think if I can make you $235 every time you tune in for a seminar, considering it's free, that you've gotten your money's worth. All right, let's do a couple more questions and see if we can go. All right. In the options thing, in the option opportunity portfolio, that's what it stands for. FXI was unable to roll from November to January 41 puts at 169, now 176. So 176, it's a nickel. Are you kidding me? Come on, Steve. A nickel, if it's under 5%, it's not a big deal. If you're paying more than 5%, you really have to think about it. All right, but if you tell me it's a nickel more, it's like, who cares? That's fine. And meanwhile, again, if you're asking to do your spreads by putting in a roll price, you're going to get screwed every time. It's never going to fill, because your broker is never going to make a fill that's not advantageous to your broker. In other words, if they can't skim a penny or a nickel off of each side of the trade, they don't want to fill it. Why should they? They have other people who are much dumber than you who are willing to make these trades. So the market maker, the guy, or even if it's a computer, the market maker or the computer, whatever, they're programmed to take a spread every time they make a trade. So if you sit there, you say, oh, I want this spread, they'll only do it when it's advantageous to them. If it's never advantageous to them, it's not going to fill. It's not the way to do it. You fill one leg at a time, and don't tell me FXI didn't move in a way that you could have filled it, because it sure as hell does. Take a look at FXI. I say this all the time. I don't know how I can possibly get people to understand it. Look, see FXI? This is what it does in one day. Up, down, up, down, up, down, and up and down. Okay? It's in the channel. So all you have to do is identify this channel, and here's the place. Here's where you sell we have puts, right? So here's where you sell the puts that you have when they're at the maximum price, and here's where you buy the puts that you want to sell, that you want to buy for new puts when they're their cheapest price. Well, now, but you wouldn't have known that. But you just watch the channel and say, here's the channel. So I execute one leg here, and then I wait for an up move, and I execute my other leg. It's not hard. This is it's 20 cents a spread here. It's going to give you at least a 10-cent move in either direction on these contracts. But it's just like the futures. And that's another thing, by the way. Another reason I love teaching people the futures is because when you start understanding this, in fact, let's go to, here, I'll blow your mind. Watch this. Trade FXI. I don't remember what the thing was. January 41 puts. That's it. Okay. So now watch this. The January 41 puts, I'm going to show you a new trick. It's very useful, and it's just like futures trading. Here's the January 41 puts, and I'm going to, what am I going to do? I forget. Copy. That's what we'll do. I'm going to copy their symbol. Now I'm going to go to the thing that says Charts and Flexible Grid. And watch this. I'm going to put it in right here. Control V, copy it in, hit Enter. And here is the trading of that particular contract. So here you see wait, that's FXI? Yeah, okay. The 41 puts. Okay, so here you see them trading, and here's today's trades. Oh, it's on days. That's why it's messed up. 5 minutes. There you go. Much better. Here's the trading. So here's Tuesday, and it was at 341, 347, 343, 39, 34, 33. All right. So your best price of the day, and you can see the channel, and you can see, and you can look back here and see the channel. So it's just like the futures. Right now, it looks like a view that you can see. You can see the channel was from here at 345 or 350. And here, 335. So you know that what your best price is going to be. You say, I expect to be able to get it for like 335. So you put your bid in for 335 on this one, and then you do the same thing with the other contracts, and you watch your channel, and that's what you expect to get filled, and you just watch them and make sure they stay in the channel. And you can even, watch this, you can even do the same thing. You see this time and sales pricing? Oh, wait, can I show a better view? Trade. There it is. Okay. You can even do your fills the same way. See that cell 10? You can buy an option contract the same way. These bids, didn't ask, there you go. 1,240 offers to buy at that price. 7,000 to sell at that price. Where's your pressure going to be? Your pressure is going to be down. So you see how valuable these future skills are? You can do the same thing in the option contracts that you can do in the futures contracts to give yourself better pricing on your entries and exits. Once you learn how to do this stuff, and that's the thing, you get proficient at it. So even if you're worried about futures trading, and you should be, by the way, you should be very worried about it if you're just starting out. But you practice, like the way you learn how to swing a baseball bat is you get in front of a pitching machine and you swing and you swing and you swing and you swing, and you start learning what a good swing is and a bad swing is, right? Same thing here. Open up what they call a paper trading account on Thinkorswim. They give you a paper trading account with a couple $100,000 in it, and trade the crap out of the futures. Get to learn the rhythm. Get to understand how it works and how it moves. And if you take enough practice, you'll start getting better at it, and you'll feel more comfortable with it. But let me tell you, once you get good at that, you trade options the same way. You know, when I want to fill an option and I want to get a good price, I go straight to these screens. You copy the option contract into here, and then you open up the this one, the AT screen, and that tells you exactly what's going on. And you have total control of this contract now. So I now know I'm going to have a hard time. I will have a hard time at this price. What's this price? There you go. I'll have a hard time getting, if I'm selling, I'm going to have a hard time getting 335. Okay, but there's a lot of people asking 335, so I can easily pay that, but basically that's where I'm going to be. Now here, there's a lot of people offering 325, so I should be able to get 330 for sure, but the best I'm going to do is this, and I watch it and I see where it goes. But you can see why it was easy to fill 330 today. A lot of people filled at 330 because it's right in between the bid and the ask here. And then you watch and then you can see your channel shaping up, and you can see exactly what's going on with all the fills. So real easy, and you look at a stunning amount. You wouldn't think this many people care about FXI, but there's 7,634 sell orders and 1,200 buy orders, and none of them are filling. That's what's funny. They're all just sitting there staring at each other. It's actually quite humorous. Where the hell active trader? There we go. So meanwhile, good. My exit was perfect, so we're done with that. I'm glad. That was fun. All right, next. Jao says, all futures just jumped. Well, they might have jumped, but they jumped back. And Declan liked my class. Thank you, Declan. Aaron says, who out of these lines of support and resistance the system when you lay them in yourself? All right. Last thing, I will answer this question. I answer it all the time. Everybody asks me every seminar. In Thinkorswim, wait, let me put these back the way they belong. I'll get so confused if I'm looking at these micro views. See this little plus and minus? All you do is you do the plus and minuses. I usually do the 5-minute charts for futures trading. Either that's a 10, or the, see, that's not good. You have to be consistent or you get yourself screwed up. All right. So the 5-minute chart, 10-minute charts are good too, though. But 5-minute, you know, if I'm just casually observing the 10, but if I'm actually trading the 5, I don't do 1-minute charts. 1-minute charts are stupid. They don't tell you anything. 5-minute charts, at least you get some idea of a trend. A 1-minute chart is nothing. It's just that whoever sneezes last gets a win on a 1-minute chart. I think the 10 is the most telling. I do like them. If I'm casually observing, I like 10-minute charts. Anywho, when you've got your charts, all you do is you add a study. See studies? And you say add a study. And this kind of study is called, it's a trend study. Then you go to the P, and you see pivot points, right? And all you do is click on that, and that's your study, the pivot point study. And when I add a study, by the way, any kind of study, which I only really use is pivot point, because I'm not a TA person at all. I just like to see what everyone else is seeing. So therefore, if I'm going to, you know, to me, if you're going to add a study, I'm only adding the study because I want to see what other people are going to be trading at, what other, you know, what the computer programs and what the traders are all looking at. So why would I customize it? Because it doesn't, you know, if I customize, the second I customize it, I'm only looking at what I'm looking at. So I like the standard pivot point study, let it be exactly what it is, and that at least tells me where other people are going to be watching support and resistance lines. Because there's a million people looking at these lines. So that's going to by itself become a self-fulfilling thing on the trading. And so I'll use those lines plus my own knowledge of what's going on and my own feeling about which way the market's trending to make a determination. All right? So what is it, 3? Oh, geez, 3 o'clock already. All right, no wonder I'm getting hoarse. All right, guys. All right, so we're going to wrap this thing up now, and I hope everybody had a good time. There will be a copy of this because we did hit the record button thanks to, let's give credit where credit is due. Who was it in the morning? The first guy. It was James. James said hit record. Thank you, James. He has made it possible for everyone to get a copy of this, and it'll be up probably tomorrow or the next day. All right, so thanks, everybody, for coming. I appreciate it, and we'll do it again next week. All right, take care, folks.